Good morning, everyone. Thank you for joining us on this webinar today. My name is Samantha Peacock and I work for Landmark. If you haven't come across the name, Landmark offer a variety of products and services, including Metropix, the floor plan software, SmartVal, the instant valuation tool, and AML checks from Compliance in a Box. So today I'm going to provide for you an update on anti-money laundering legislation, looking at your obligations and practical ways in which you can fulfil your responsibilities. A key change to the legislation was enacted on the 26th of June 2017. You are now required to verify your buyers and domestic politically exposed persons, and I will cover in some detail the implications of both today. Hopefully, I will be able to give you a good steer on this, but if you do have any questions, I will provide my contact details at the end of the presentation if you wanted to get in touch directly. So, the first place I want to start is to look at why agents have to undertake anti-money laundering checks. HMRC, who regulate AML compliance for estate agents, have released guidance to help you deal with existing regulations and the implications of the changes, and the link is on this slide here. The statistics about the reporting of anti-money laundering are quite alarming. It is estimated that £100 billion is laundered through the UK property market every year. But despite this, the National Crime Agency reported that in 2015, of all the suspicious activity reports, or SARS as more commonly known, received with about 380,000 reports sent in total, less than 1% of these reports came from estate agents. Now, there could be a number of reasons for this, but this has now led to the sector being under more scrutiny. You may have heard the announcement from the NAEA yesterday from Mark Hayward that HMRC have loaded 880 penalties across the sectors last year. Now, that's not 880 just to agents, that's across sectors as a whole, obviously including banks and things like that, but it does show obviously that this is becoming more and more pressured. Many of you might have seen the From Russia with Cash expose on Channel 4 a while ago, which brought the issue to the wider public's attention. So the intended aim of these regulations is to prevent the use of illegally obtained funds or terrorist financing from being legitimised through the sale and purchase of property. Many agents have shared their frustrations with me about the new regulations, specifically the inclusion of purchasers and the fact that the agent has nothing to do with the money. I think the point on here from the guidance is important to recognise and give some context to why agents are now required to include purchasers in their checks. If you can see this paragraph here, it says HMRC advise estate agency businesses do not commonly handle the funds used to buy a property. However, they are a key facilitator in a property sale and come into contact with both parties to the transaction at an early stage, and so are in an ideal position to identify suspicious activity. While we can all be guilty of being focused on collecting ID, utility bills, verified documentation and so on, customer due diligence is a process by which you use the tools at your disposal to assess prospective clients and come to a decision about whether you are prepared to enter into a business relationship with them. As I go through the slides where I quote directly from HMRC or other guidelines, I have highlighted the word risk deliberately to bring attention to the focus the regulations place on you understanding the risk to your business and demonstrating how you are mitigating that risk in your policies and processes. This is also known as KYC or Know Your Customer, and it involves understanding more about the individual and the nature of the transaction to come to a risk-based assessment. So for the most part, this has been traditionally achieved by collecting paper ID, whether that be a driving licence, passport, utility bills and so on. But more recently, the property sector has followed financial services and insurances and made of electronic checks to help with client verification. The final point on this slide is critical. No illegal funds need to have passed through the business in order for you to be culpable. HMRC are looking for documented policies and processes that steer staff towards an appropriate risk-based decision when taking on new clients. The changes to the regulations, known as the Fourth Money Laundering Directive, came into effect on the 26th of June last year. There are two key changes to your existing responsibilities as a result. The first is the need to undertake customer due diligence on buyers in addition to vendors. Importantly and reassuringly, this isn't anything over and above what you have been doing for vendors. Rather, it's just an extension of the existing checks to your purchasers. Second is the requirement to identify and apply enhanced due diligence on UK politically exposed persons, or PEPs. The final point does come up from time to time. You need to apply CDD to beneficial owners of companies, people with 25% or more interest in the business, and executors of the will in probate cases. In terms of the timings, not much has changed here for vendors. You must ensure your customer due diligence is complete prior to entering into a business relationship. So, before you list the property. And HMRC will check the date on which the property is published against the date of your client verification. With regards to the new requirements, the guidance from HMRC outlines that purchasers become a customer when the offer is accepted. Therefore, customer due diligence must be complete before contracts are exchanged. Now, in reality, this needs to be as early as possible and can be done any time after an offer is informally accepted. You do not need to take retrospective checks on purchases prior to the 26th of June of last year. So what do HMRC say we need to do to comply with their requirements? When it comes to customer due diligence, the list here is taken directly from the regulations and I suspect includes some of your own current activity. You must, for example, verify that an individual selling a property is legally entitled to do so. Refuse to deal with persons or entities if you cannot verify their legitimacy. Keep and maintain copies of customer due diligence. So for the vast majority of people you deal with, it is enough to demonstrate you have acted in this way. However, a very important point is almost buried in here, and HMRC are very hot on this. You must apply enhanced due diligence to take account of the greater potential for money laundering in higher risk cases, including when the customer is not physically present when being identified, and in respect of politically exposed persons. Where you are identifying higher risk clients, you need to undertake and evidence that you have applied a greater level of check on them. This is known as enhanced due diligence. Applying enhanced due diligence will be dictated by your own risk assessments, policies and procedures, but HMRC have provided some guidance about indicative behaviours of those we might consider to be high risk. It should be said that this list is not exhaustive. It talks about unusual business behaviour, complicated company structures, people in high-risk areas such as London. We could add to this list cases where there is an unusual or unnecessary haste or the use of an unknown solicitor for the conveyance. There are other transactional red flags that should put you on alert to a higher risk transaction. HMRC's guidance suggests that transactions where private banking is used could be considered higher risk, as could the desire for anonymity. Your purchaser wandering into your office with a suitcase full of cash, that's a bit of a red flag. These are not hard and fast rules, however, or indeed evidence of illegal activity. But they are red flags that should alert you to the need to apply enhanced due diligence. Staff should be trained on identifying potential high-risk scenarios in order to be able to make a decision on whether to apply enhanced due diligence or not. I would suggest that identifying and verifying politically exposed persons is probably one of the biggest challenges facing estate agents as a result of these changes. Without any definitive list, this is tricky at best, and unless your enhanced due diligence identifies otherwise, you can enter into a business relationship where a PEP is involved, provided you undertake enhanced due diligence and obtain senior management approval to do so. But we do have this. HMRC's guidance does outline who we can consider to be a politically exposed person. So, for example, a member of parliament or members of governing bodies or political parties, Supreme Court judges, ambassadors and high-ranking officials in the army. It also includes family members such as a spouse, partner, children and their spouse or partner, brothers, sisters and parents and known close associates, before going on to actually define the close associates. The detail of this is available in the guidance from HMRC. And the good news is that HMRC have acknowledged that UK PEPs will present much less of a risk from a money laundering point of view than foreign PEPs. And in such cases, although enhanced due diligence must be applied, a reduced level can be applied. Where enhanced due diligence is appropriate, you will need to evidence your activity. Essentially, you need to demonstrate that you are doing things over and above your customer due diligence. Again, the list here provided by HMRC is indicative and not exhaustive, but it gives you a good idea of what is expected of you when it comes to evidencing your activity. Typically, HMRC suggests enhanced due diligence may include obtaining additional evidence of the individual or individuals you are dealing with, verification of documentation provided, and or further clarity on the nature of the transaction, including funding. Ultimately, you can only do what can be reasonably expected of you. You are not solicitors, so a thorough investigation of bank accounts and understanding financial paper trails is not a speciality skill set for most. As such, you would not be expected to go to that level of detail. A question that people have raised before is about the selfie method of undertaking customer due diligence and whether or not this is acceptable. Supervised businesses have been requesting their clients take a selfie, holding their picture ID next to their face in the photo, such as in the example here. In this way, it is possible to visually verify the identity of the individual in the selfie with the individual in the photo ID. However, in HMRC's view, the selfie method itself does not meet the requirements under the money laundering regulations because it isn't possible to know if the photo ID is genuine or not. HMRC say it is good customer due diligence to check all physical documents that you receive, and you should take additional measures to verify the original documents supplied. I will just play you this short video to highlight this point. Electronic checks modernise your anti-money laundering procedures and tick a number of boxes within the regulations when it comes to applying customer due diligence. If we refer back to the guidance from HMRC on what you must do in order to carry out customer due diligence, electronic checks will enable you to both complete and document customer due diligence on all customers and beneficial owners before entering into a business relationship or occasional transaction. Due diligence on the other party to the property sale, a procedure to identify those who cannot produce standard documents, a system for keeping copies of customer due diligence and supporting records and to keep the information up to date. Also helps you to verify paper documents when taking these from customers, either as originals or when using the selfie method or other scenarios. All of this in under a minute. And using electronic data is more thorough than using paper methodologies, as clients invariably have different levels of information they can provide. Some may or may not have passports or driving licenses and so on. Electronic checks provide an interpreted pass or refer result using the data available and identifies those on the sanctions list and PEPs. In a world that is more paperless by the day, requesting paper copies of ID from clients presents a growing challenge. Instead of requesting paper ID from purchasers and potentially slowing the transaction, how much more positive an experience are you providing your client with electronic checks? Instead of valuers chasing photo ID or paper documentation, what if that time could be used to chase new leads and valuations? What impact could this potentially have on your business? And what is the perception this leaves your customers of your business? In other words, are you choosing to be Blockbuster over Netflix? Collecting a few key pieces of information about your customers will enable you to run a check on their identity and apply a consistent level of customer due diligence when it comes to both clients you meet and clients you don't. This short video that is playing is showing you just how simple that really is. If we run down the form quickly here, you'll see how easy it is. You can evidence your risk assessment by adjusting the level of check to normal or high risk. You need to collect the full name and date of birth and 12 months of addresses as a minimum. When we're applying enhanced due diligence, we can add the passport, driving license, national insurance number 2, and I quote again from the guidance, take additional measures to verify the additional documents supplied. How often are we guilty of historically taking a passport, driving license or utility bill without really doing any further due diligence? What does it actually tell us? A good tip I was given not so long ago is to have your remote client take this selfie with this ID, as previously mentioned, and then use this electronic check to verify the legitimacy of the document. The checks themselves provide an interpreted result, either pass or refer. A pass result is determined by the number of primary checks made and the particular level of risk associated with the client. The amount of electronic proof required to verify a person for anti-money laundering purposes differs depending on the perceived level of risk, either normal or high. So for normal risk checks, the Joint Money Laundering Steering Group state that for normal risk, one match on an individual's full name and current address, and a second match on an individual's full name and either his current address or his date of birth is required. 3 primary checks are required for a high-risk pass. The name, date of birth and address details are run against positive and negative Experian data, which includes both public information. This also includes the electoral register, county court judgments, bankruptcies, administration orders and so on, and the credit account information sharing, which holds information on over 440 million shared account records like banks, mortgages, credit cards and utility accounts. So plenty of information out there for us to be able to find. If an individual fails on a sanctions list, you must cease the relationship immediately. Where we have pass results and the transaction does not throw up any other risks or red flags identified in your risk assessment, this is important to note here, we have sufficient evidence to have applied customer due diligence. You do not need to collect any further documentary evidence for the individual. Here is an example of a refer result where we have identified a failure to on both the number of primary checks and this individual has been flagged as a potential politically exposed person. In these cases, we would need to apply enhanced due diligence as identified by your own AML policies. Typically, this will include collecting further evidence of the individual, so things like passport, driving license, utility bills, birth certificate and so on. We can use the check to verify that document if we have it before we run the check. Where it is flagged, we also need to establish whether the individual is a PEP. So unlike the sanctions check, there is no definitive list of PEPs. So the check is returning an indication of the risk posed using the data. In most cases, if you ask someone if they are a PEP, they'll probably just give you a funny look. You can ask them what they do for a living or whether they are connected to somebody who is a PEP, as per the definitions we mentioned before provided by HMRC, and then you could make a file note to that effect. In a number of cases, taking these simple steps will rule out the likelihood of the individual being a PEP, and you can continue with the transaction. Where you do identify, you need to follow your AML procedures and obtain approval to continue with the transaction. All searches and reports are retained indefinitely, fulfilling the legal requirements to evidence documentation for 12 months in the case of PEPs and 5 years for the money laundering regulations. All documents are archived by a unique reference number and property address along with a date and timestamp to provide an audit trail for head office and HMRC. The reports are all available 24/7 for download with no charge for retrieval. But before you start panicking too much, Landmark are about to provide a guiding hand. All our customers are able to contact us to discuss cases and results and review options with us. We don't just leave you high and dry. As well as being at the end of the phone or email, we have lots of resources to support you. This is one example which accompanies every check and gives you a breakdown of what the individual components of the check mean and what typical next steps you can take where you need to apply enhanced due diligence. As ever, with these sorts of risks, the vast majority of your clients will be ordinary people who are simply looking to move, relocate, upsize, downsize, and who pose no risk to your business from a money laundering perspective. The key objective with all of this is to evidence and document your activity. Here at Landmark, you may be interested to know that we are not just a compliance tool. You may have come across these brand names before. We can also help you to generate leads with our instant online valuation tool known as SmartVal to help you capture new business and build up your pipeline ahead of your competitors. We can also provide you with bespoke marketing reports with Landmark Analytics to help you stand out in the valuation and show how much knowledge and research you have about the property and the area it's in. How many of your competitors will just turn up with the best price guide? We can also help you with floor plans. Metropix is the UK's #1 leading floor plan service provider, giving you the option to draw plans in colour, 2D or even 3D, and it's so quick and simple to use. We are also launching Metropix Mobile fully in a month's time, and it is available as a mobile app. If you choose to take out 2 or more of our products, we do have a pack discount, making combining products more cost effective. Thank you very much for your attention today. I hope you have found this useful, and if you do have any queries or indeed are interested in finding out more about Landmark and any of our products or services, then please don't hesitate to get in touch. My contact details are here on the slide. Thank you.